Join thousands of NFT traders who already start their day on CryptoSlam.
In a world of back-breaking inflation, war, and political strife, could crypto be the answer?
This is about individualism, and this is about empowerment, and that makes the world sturdier. It makes the world safer.
And will legacy financial institutions be able to catch up?
We're trying to get as many traditional finance people to think about the future very, very differently.
Meet Anthony Scaramucci, man of many colors, entrepreneur, author, investor, and yes, even for 11 days, White House Communications Director.
Listen, I got my 11-day PhD on how Washington works. Okay? It was brutal, okay?
From the White House to the world of digital currencies, he now has crypto on his mind.
This is why we're here, is to get as many people as possible to create that bridge between traditional finance and the future of finance.
This is Word on the Block on Location, the series that takes a deep dive into blockchain and the emerging technologies that shape our world at the intersection of business, politics, and economy. Coming up, Anthony Scaramucci, founder and managing partner of Skybridge Capital, a global alternative investment firm, joins in to dive deep into those topics and a whole lot more.
Anthony, it's great to have you here. We are in Bahamas, but when people think of you, they don't think of you working with an FTX of sorts. You know, you're part of the Wall Street allure, you're part of the traditional world, but you're also prescient. We saw your moves into crypto well before anybody else made that move.
Well before some of the Wall Street guys. I mean, obviously, you know, the Winklevosses got in there in 2014, and I think Sam probably got in there in 2011 or 12. But I mean, yes, I think we saw what was happening and wanted to take advantage of it, and we got a lot of pushback. You know, I had one client of mine, Sovereign Wealth Fund from the Middle East, said, "Listen, I have to fire you. I can't have any cryptocurrency exposure." I said, "Okay, well, I guess you're going to have to fire me then." He didn't fire me. Then he called me at the end of the year and he said, "Well, thank you for pulling me into the future." And so that's what conferences like this are about. We're trying to get as many traditional finance people to think about the future very, very differently. You know, it's a weird thing, but human beings do not like change. Okay, my grandmother had a rotary phone. Okay, and my mother had a touch-tone phone. Okay, right. And you know, my mother's still using that touch-tone phone, I got to be honest. I mean, and her cell phone has got like a clunk to it, you know, it's like a flip, you know. Right. And Mom, we can get you an iPhone. I have no use for that, right? I got a friend of mine, he's a multi-billionaire. He's in his mid-80s. He doesn't do his own email. He like barks at his assistant, "Read the email to me from Anthony," and then he dictates back to her. So you have a hard time, human beings have a hard time making changes and embracing new technology. And so one of the reasons why we're here is to get as many people as possible to create that bridge between traditional finance and the future of finance, which I think is going to be DeFi. And I know you think it's going to be DeFi. And I want people to be a part of it with us.
The dichotomy of that thinking is that money is no longer influential. I mean, investing in something is the cheapest way to get into technology. The builders are here. The blockchain projects are here, but it still needs capital. Now, the difference is that they don't necessarily have to go to old Wall Street types.
Right. Well, that's the brilliance of it. I want you to think about this for a second. Last May, there was a wipeout in the cryptocurrency market. It's probably a 50% drop. $1 trillion was lost. I want you to imagine, because you've been covering the markets for a very long period of time, if that happened in the banking community, the money center banking community, we had a $1 trillion wipeout, okay? We'd have like a 4-alarm fire at the Federal Reserve.
Absolutely. Right.
Okay, so what's happening is these decentralized properties are way sturdier. And I think what you learn from sociology, political science, biology, things that are decentralized are sturdier. And, you know, listen, I mean, the American government is actually one of the most decentralized governments in the world, which is the reason why it's lasted 246 years. So we're about to enter an age of individualism, an age of libertarianism, and an age of freedom. And by the way, this is why some governments, autocratic, authoritative governments, don't like it. Get it out of my country. Move your mining. Move the assets. You're not allowed to own it because they're afraid of it. But I'm not afraid of it. I want people to embrace it. And you have a colleague that says it better than me. There's no systemic racism in this, right? Because you are an individual able to express yourself, and you don't have to come into some centralized company and listen to a whole lot of nonsense and bunk.
That access to talent is also critical. I mean, people just want to be able to do good work. What kind of environment do you think that, you want to create? And also, as you see the space around you, what do you want to support?
It's a really good question. So there's a lot of different elements to that. So I want there to be a media angle. People like you are so important because you can't imagine the influence that you have because you're reaching people that need to know about it, but they're almost a little embarrassed because they don't know about it, so they can tap into somebody like you. So there's a media angle, there's a conference angle, and then what I would call there's a fintech laboratory angle where we have a venture capital project going on, and then we have a coin project. We're just going to own the underlying coins. And then, of course, we have our broader-based several billion-dollar fund where we own hedge fund assets in there, guys like Point72 or Dan Loeb at Third Point. But we have very big macro positions in cryptocurrencies like Bitcoin and Ethereum. So for me, when I get up in the morning, I say to myself, how am I going to get one more person that doesn't understand it or hates it to at least embrace it and open their eyes? And that's what I'm trying to do every single morning.
And they got a big part of that here. What did they hear that was so different than, and why the timing now? What's the signal from the market?
Yeah, so, listen, first of all, the FDX guys are brilliant guys. They're young enough to be my kids, okay? I think Sam is like 6 months younger than my oldest kid or something like that. And he's an amazing guy. And so he came to my SAL conference last September. He had a great time. He turned to me, he said, hey, do you think we could work more closely together? And so we announced 6 months ago, I guess, a deal with them where we would do a conference in Abu Dhabi, Singapore, return to New York. And then my partner, John Dorsey, who really runs all of this, suggested to Sam, well, why don't we do something in the Bahamas and we'll make it specific to crypto. It's your world headquarters now. We can showcase the Bahamian government, their progressive ideas about regulation. We can bring people down here, and then let's discuss a layered curation of the editorial content. And so what do I mean by that? We want stuff for the younger people, but we also want stuff for people that are my vintage, so that somebody can walk out of a meeting and say, oh my God, I actually understand better what Bitcoin mining is.
Did you get that feedback?
I thought so. Listen, I it's my event, so I don't want to be overly, chest thumping, but I walked out of a situation. My wife was with me, and somebody came over to me, who's a person I know for 30 years in the business, and he says, I got to thank you. First of all, I didn't want to come to this, but I decided I was going to come. Came on his own time, because his firm doesn't have any no crypto exposure. They can't even have assets in crypto, but he came on his own time, and he said to me, I really have a better understanding of what's going on, and I understand now, putting it in its most simplistic way, the blockchain is a delayering mechanism for the global economy. Someday you and I, without that bank, before we came on the air.
That's why it's so dangerous.
It's dangerous but exciting. Before we came on the air, my phone was lighting up. I had to call my bank to confirm my wire transfer to another party. You saw me do that?
I saw you.
I said, wait, we can't go live. I gotta. Yes, I'm confirming.
In a second, but this is why it's such a dangerous. It feels dangerous if you're part of the legacy, if you're part of traditional, and if you're part of.
Yeah, if it's dangerous, of course, it's going to wipe you out.
Exactly.
It's going to wipe you out. But here's what I tell people: relax, because in 1985, to really date myself, I was waiting online at a post office in Rome to be able to go to a phone booth to call my mother. I had to call her on Wednesdays because Wednesdays was Prince Spaghetti Day, right? So I'm waiting for the phone booth, and they give you, 5 minutes. It was $15. I had an American Express traveler check.
Right.
You're probably not old enough to remember those, but I'm signing the thing over. And of course, I'm lying to my mother, telling her I'm not drunk in Rome, the whole thing, right? And then the phone call's over, right? That phone call today is costless.
That's right.
I can go to any cafe in Rome. I can log onto the internet and make that call. Did the phone company survive? And the answer to the question is yes, they survived. They're just doing different things now. And that's my message to the TradeFi people. Relax, we're all going to be fine, but you got to make an adapt. You got to be a Swiss Army knife in this world right now. You got to pull out another weapon. The one that you were using traditionally is not going to be the one you're going to be using in the future.
And so when you take a look at the landscape, and you've done that with Skybridge, and you've done that with a lot of your bets, when you take a look at the landscape of blockchain projects and firms and exchanges, what does traditional Wall Street, the banks, the JP Morgans of the world, and we know what they're all doing, but the BlackRocks, et cetera, what do they need to do? You've criticized them for not doing their homework. What kind of homework do they need to do to take a look at the landscape and make those bets? Because they're not building right now,
right.
And to get in, it's probably going to be acquisition time.
Yeah, well, they're doing two things. They're ignoring it, and they're saying it's rat poison, and it's worthless, and it's going to go away. And if they're into it, they're using their private equity capital to buy into companies that support it.
Right.
So I find that odd because the underlying tokens have to do well for those companies to do well, and yet they won't touch the underlying tokens. Okay, so guys, philosophically, take a chill pill and really start to understand what it is so that you can embrace it. And here's what I would say, okay, because it's a gradualism and incrementalism is usually the best process. So own 1% of it, own 0.5% of it. Let's say I'm wrong. Let's say Sam Bankman-Fried is wrong. Let's say all of these brilliant thinkers, Mike Novogratz, Pete Greer, let's say they're all wrong. Okay, but at least get a toehold in there. Okay, why miss this? If this is going to transform our society where you and I are going to be able to transact with each other without permission, let's say we didn't know each other or like each other or trust each other, but we trust the blockchain. And now I can send money to you or you can send money to me. I can buy your house over the blockchain. Or I can go to Starbucks. Someday I'm going to be able to go to Starbucks. I'm going to take out my smart wallet. The barista is going to say to me, hey, you know what? We're doing a share repurchase program here. I'm going to have tokenized Starbucks stock on my smart wallet. And she's going to say, I'm going to give you 15% off if you sell some of your Starbucks shares to us right now at this lunch counter or this table counter. You want to do that? Click, click, boom, boom,
your
blockchain.
Barista is your broker.
But that's what's going to happen. That's what's going to happen. I want to set this for you. It's 1998. I have a fat box computer. It's connected by a cord to a mouse, and I'm trying to dial up the internet. You can hear the humming and the whirring and the burring, and it takes 35 seconds for my landing page to come on, and it's AOL. And now from the future, in the DeLorean, comes Sam Bankman-Fried, and he pops out of the DeLorean, okay, and he says, hey, I'm here from 2022. And you know what? You're going to stream 4K video over this someday. And oh, by the way, not just you. Hundreds of millions of people are going to do it. And so you can't see it today, but I'm telling you, that's going to happen in the future. And that's where we are with DeFi right now. Mm-hmm. It's a little clunky, a little hard to understand. Protocols are just being built. We are so early. But 10 years from now, I will be buying my Starbucks with tokenized Starbucks stock with the barista. And you got to have the vision to see that. More technology, more technology improvements. You're going to need to, well, you see, I have an opinion in the pluralistic societies, it's already over, okay? Because, a country like China may not like it, and the United States may have regulators that don't like it, but remember this about Uber. No regulator wanted Uber. But you know who wanted Uber? The people. People wanted Uber. You have 73 million people in the United States that own a piece of a cryptocurrency. Mm-hmm. Good luck, okay? Because that's like a decentralized lobbying organization, okay? You want to upset those people? Mm-hmm. Mayor Suarez was here at a dinner with me the other night. He says, hey, you know how many people it takes to win the presidency? I said, no, sir. How many? About 55, 60 million. You know how many people own Bitcoin? 75 million. Okay? Trust me, these people are going to be pro-Bitcoin going into that presidential candidacy in 2024.
China just came out. They said, hey, we're putting a pause on any enforcement on tech.
Right. Well, they have to. They have to. Why are they doing that?
For various reasons. But the big part of it is, if blockchain and crypto is going to be the next phase of growth, you can't have growth in blockchain without the underlying security called crypto.
So that's the point. See,
that.
they have to. They're not going to miss it. They're the second largest or the largest economy, depending on how you want to measure them. They've also got 1.3, 1.4 billion people. They can't miss this. They can't miss it. But here's the thing about this. This is about individualism, and this is about empowerment. And that makes the world sturdier. It makes the world safer. Think about the autocrat Vladimir Putin with all that central authority and all the damage he's doing to the world right now. Let's take the keys away from the drunk driving central bankers. Okay, what are you guys doing? Okay, let's take the keys away. You didn't handle the money right. Let's give the money to nobody. How about nobody can run the money? Let's have a decentralized process so no policymaker or politician can capriciously disrupt your money. My dad was a blue-collar laborer. He worked by the hour. You're stealing his money when you're inflating it away. Yeah. Right? The inflation is the most regressive tax that you can impose on a society. Why don't we cut it out? Why don't we help those people? Because you're going to help the rich when you inflate because they own the assets. Assets are going to go up in value. But you're stealing the money from my dad. Can we stop that, please? Mm-hmm. Okay, and that's the future. And we have the technology now to create that future.
Where does the U.S. position itself? Right now, we have the Biden administration. They just came out with the executive order. There's a little bit more language and guidance. We have the SEC, the CFTC. Now we have the Federal Reserve starting to warm up to the idea of a digital dollar. Mm-hmm. Lael Brainerd, obviously a huge proponent of that, now the vice chair. How do you see the next 2 to 3 years, even 5 years, probably 20 years in crypto years?
I'm bullish because the people and listen, I got my 11-day PhD on how Washington works. Okay? It was brutal. Okay. But I'm telling you, follow the money and follow the people. Okay. And remember, these politicians, they want to stay in power. And these campaigns are marketing competitions. So wait a minute. If I'm pro-crypto, I'm going to stay in power. I'm going to be pro-crypto. It's just the way it's going to happen. Also, let me give you one more distinction I think is important for your listeners and viewers. In the United States, the IRS has already deemed cryptocurrencies intangible property. Okay, now I didn't learn a lot in law school. I learned probably 2 things in law school. Number one, don't be a lawyer. I thought that was the most obvious thing, okay? But the second thing was about property. In the United States, the Bahamas, anything that's tied to British common law, property is sacrosanct. Yes. Okay, and so therefore, they can't get rid of it. If I own it and it's my property, they have to buy it from me. That's called eminent domain. And I can trade it or sell it to you for consideration. That's been going on now for 900 years, dating back to the Magna Carta, and that's not going away. Okay, and they've already made that decision. Okay, so don't forget that in the United States. When you're hearing all these ranting and ravings from some of these politicians that don't like crypto, the IRS already deemed it property. Okay, so you're not getting rid of it.
Well, listen, that is a great point because China has also done that in its legal system, that owning Bitcoin, Ethereum, whatever specifically Bitcoin, but owning Bitcoin is a property right. Right. That is an asset that can be protected. Now, all the activities
They'll come around.
it.
They'll come around.
You think so?
I do. Yeah, they won't have a choice.
They're already doing CBDC. It's in soft rollout phase. It's probably already being implemented across the country, and we've been reporting on that. Where do you see a bifurcation? I mean, how does crypto kind of create a parallel system? And how do we need to prepare when we take a look at the macro?
Again, just think about it from an extension of other technologies, right? We had a horse and a carriage. Then we had a horseless carriage. We made the migration over, and then we had to build roads and bridges and tunnel systems to carry those horseless carriages. And so this is the same sort of thing. You're in traditional finance right now, we have these protocols and procedures that can allow you to do things differently. You'll start to see that transition. You'll start to see the regulators catch up to it. And there will come a day where we're transacting with each other without that third party. You know, the El Salvadoran government believes that they can have their citizens save $400 million a year from expatriates moving money back into El Salvador, bypassing MoneyGram and Western Union and all those exorbitant fees there. American Express, they have to come up with other ideas, because I could sit in a restaurant someday and I could pay the restaurateur over the blockchain, wallet to wallet, and bypass the 3% surcharge. But people will come around. Okay, but if you're in an elevator, or I'm in an elevator, someone turns to me and says, what about the blockchain? I say it's a delayering mechanism. You're taking third parties out of transactions, which is reducing costs, and it's improving the efficiency in the society. Think about that. Think about how monumental that is. Mark Andreessen said, when he fully understood it and he had his eureka moment, he said, oh my God, this is bigger than the Netscape browser that I myself created. This is even bigger than that. And look at the money that Andreessen Horowitz has plowed into this industry.
It's a huge play. Let's take a look at the macro outlook. Where do you think we're going to go? Where do you think we're going to go in terms of price action?
I think it'll be very sloppy in the near term. There's inflation. There's a war going on. There's been, unfortunately, the war is escalating. It's not de-escalating, which has me upset. It has the world upset. And so there will be a lot of sloppy trade activity right now. There's still the specter of uncertainty in the United States related to regulation. But I think a lot of that stuff will end once we get a Bitcoin Cash ETF in the U.S. We have them in Canada. We have them in Europe, the ETPs. We will eventually have a cash ETF in the United States. And what that will do is open up a floodgate of activity, because the minute they say that the cash ETF is okay, every wirehouse, every bank is going to say, I got to have that as a part of my arsenal in terms of financial instruments and dealing with my clients.
Yeah.
So once that happens, you're forcing everybody into the pool. Fidelity did something very recently. They're allowing for a 401k product related to Bitcoin. I just want you to think about how monumental that is. I'm old enough to remember when Fidelity transformed the stock market, the mutual fund industry, by offering those products and services to their clients through their 401ks, when the 401ks were created. Now, you've got $2.4 trillion at Fidelity in 401ks. Just imagine a couple of percent of that going into Bitcoin.
Well,
and Bitcoin's got a fixed supply. Wake up, people. What are you guys doing? Wake up.
There's only 21 million.
Wake them up.
Only 21 million.
Yeah, but a couple of million has probably been lost in the early adoption. You know, some guys had it on their Blackberries, in a clunky laptop somewhere. It's been thrown into a landfill somewhere. We had that one guy, he's trying to dig up the landfill. I mean, you probably read that story, right? The poor guy.
He's got $1 million of risk.
Yeah, I got $50 million of Bitcoin on my laptop from 2012 or something, you know.
But listen, SALT conference in New York, September. You're also going to be
Singapore in November.
Singapore.
Probably February, March for Abu Dhabi.
We'll be there.
Thank you so much. It's great to be on with you.
Absolutely. Super appreciate it. And thank you, everyone, for joining us on this latest episode of Word on the Block. I'm Angie Lau, Editor-in-Chief of Forkast. Until the next time.
Coming up on the next Word on the Block on Location, a crypto billionaire who wants to give it all away, FTX's founder and CEO Sam Bankman-Fried, along with Amy Wu, head of FTX Ventures Gaming and M&A.
We have a licensed exchange in Dubai. We also have one in Japan. We have one in Australia, in Switzerland, in Cyprus, Gibraltar, Bahamas, obviously. And, we're applying in a number of other places as well. And so, much different from 2 years ago when almost no jurisdictions had registered or licensed anything. At this point, we are starting to see some jurisdictions come out and issue those license and oversee the space. I think that has helped the international market. start to move in the direction of growing and maturing. We would love to see that happen in the United States as well. I think it's extremely important.
We at FDX Ventures, we're excited across crypto and Web3 innovation right now. We're really excited to back generational founders with vision. We also very deeply look at the underlying technology, the underlying blockchain technology, for example, and really understand, today there's, let's say, tens of millions of people that own a token, trade tokens maybe, and far fewer than that actually are actively engaging in blockchain applications. But in the future, when there's hundreds of millions and billions of people interacting with that, with applications that need to run 1 million transactions per second on chain, does that blockchain, for example, actually scale? We look very deeply at the technology, and so we spend a lot of time actually in infrastructure and developer platforms.
It's an episode you won't want to miss.